There's been a growing debate across the crypto space, and honestly, it's a fair question to ask at this point, and it is Bitcoin already in a bear market? Some analysts argue we've quietly been in one for nearly a year, while others point to the fact that we're right on schedule with the traditional 4-year cycle timeline, and now with Bitcoin losing major moving averages like the 50 EMA, levels that held through the entire run, people are starting to wonder whether this is just a deep correction or the start of something much bigger. So today we're going to break down the key signs that suggest that we could see more downside, the structural shifts happening on the higher time frames, and whether there's still a realistic path toward any kind of recovery. No fear, no hopium, just data structure and the charts that matter. My name is Paul Sampson. Welcome back to DataDash. Folks, I want to highlight a project that's genuinely pushing forward one of the biggest narratives in this entire cycle, and that's Bitcoin DeFi. And this isn't some hype play. This is a team that's already leading the category, and they're building something that could completely redefine how Bitcoin actually gets used in the real world. Today's channel partner is Bob, which is short for Build on Bitcoin, and they're building what is essentially the gateway to Bitcoin DeFi. And if you've been watching the charts lately, you already know Bitcoin is maturing into a multi-trillion-dollar asset that institutions actually want exposure to. But the crazy part here is that almost none of the liquidity is being used productively. And right now, only about 0.3% of Bitcoin's market cap is actually deployed into DeFi, which is about $8 billion out of the $2.2 trillion asset. And compare that to Ethereum, where roughly 30% of its market cap lives inside DeFi. If Bitcoin simply matched Ethereum's penetration rate, you're talking about over 700 billion in potential TVL, and that's literally a 100x gap. And that's exactly the opportunity that Bob is aiming to unlock. Bob isn't a sidechain, and it's not a wrapped Bitcoin ecosystem. They've built something hybrid, the best of Bitcoin and the best of Ethereum basically fused together. Bitcoin security plus Bitcoin finality. Ethereum level DeFi apps, tooling, and user experience. Native Bitcoin on-chain through BitVM, no custodians, no wrappers. As well as zero-knowledge proofs plus Bitcoin staking to secure all the transactions. One-click Bitcoin DeFi strategies across 11 plus chains. And the result is simple. Your BTC stays BTC, and you can use it in real DeFi, whether that be lending, trading, staking, vaults, across multiple ecosystems, all with one transaction. And that's something that no other chain is doing at this level. And the part that has impressed me the most about Bob is that they've already have over $300 million in total value locked. They've also partnered with major names such as Uniswap, Chainlink, Fireblocks, Amber Digital, and they've raised $21 million with their earliest investors doubling down in later rounds, and that speaks volumes about their conviction. Their BitVM-powered native BTC bridge is already live on testnet, and it's built specifically with institutional-grade safety in mind. Anchorage, Rockaway X, P2P, Amber, all backing this direction. So again, this isn't a speculative experiment. It's actual infrastructure. Players are lining up behind it as we speak. Folks, this isn't about just Bitcoin's price going up. It's about Bitcoin finally becoming useful. Staking, borrowing, lending, structured products, yield vaults, all the things that Ethereum users have had for years. Bob is building the full stack required to make that happen at scale. If Bitcoin DeFi really is the next 100x type of vertical in this market, Bob is positioning itself to be the gateway for all of it. If you would like to go deeper into how it all works, what they're building, and the roadmap heading into 2026, I'll leave their links down in the description below. I recommend starting with their blog post on native BTC deposits. It does a fantastic job breaking it all down. Huge thank you to Bob for supporting the channel. So without looking at things that pretty much traditionally everybody else is looking at, some of the EMAs, some of the death crosses and all that, I'm going to take a look at a couple other things here, right? So Bitcoin just kind of zoomed out here. We have a pretty sizable correction, and not to really say that we haven't seen this since the entirety of this overall run a couple times over, right? Especially right in this region here, and then now here, right? All about the same correction areas. I will state that they are getting faster, okay? So this was about a 6-month, drawdown here that took place that was about 33%. Then we had about a 3-month period right here, and this has taken place in about a month and a half. Now, a little bit more, I don't want to say the word locally because this is still a really high time frame setup here. This is going all the way back to the carry trade low back in August of 2024 to our current high here. And this is a sequence of Fibonacci's known as a harmonic pattern. This is a bearish AB equals CD with 3 specific targets, 2 of which are pretty moderate areas to really look to. But there is an aggressive one that is down here, which is pretty much a full retrace to the C point, which is back to our tariff lows. So realistically, we've come down, we've met our first one here. You've probably seen me mention this a couple times on the channel so far. We got to bounce back up. Loss of that first target, back tested it there, blew through right here. And so far we've back tested this as well. And while we're living below this region, again, we just have to anticipate seeing these next levels met. And that just is what it is, technically speaking, okay? We've had no support come in along the way here so far. Really big high time frame setup here. It's just what you have to anticipate. Now, in the sense of fairly simple market structure, we have two pretty decent lows that, if you're looking at everything here, we obviously have put in a series of high, low, higher low, higher high, higher low, higher high. So far, putting in potentially higher lows around here, right? So in regards of if we're in this major bear market and things of that nature, at least terms of what we're looking at and dealing with right now, again, timing aligns with that 4-year cycle, of course, coming in again with that AB equals CD even. It timed out perfectly right at the end of the 4-year cycle. And when I mean the end of the 4-year cycle, it means that the amount of time that we spent in the last bull run, if we were to project that off of our 2022 low, it was exactly to the week, to the day, basically. The same amount of time we've spent in this rally up to the upside, topping off at 126. So when people are talking on that 4-year cycle, that's really what they're talking about in the sense of timing. Obviously, there's a lot of other things that go along with that. A lot of things were different this time around as well. So just, take that for what it's worth. At this point, let's call it for what it is, right? So far, we've put in a high right at that point. The fear is here. The market is in extreme fear, by the way. Let's go ahead and just refresh this here. Take a look. Oh my goodness. That's the stock market at a 6. I thought that was a joke almost. Still at about a 14, 10 to 14 here. I think it was 11 earlier, so it's up 3 points. Stock market is now almost basically at 0. Interesting metric there just to kind of pay attention for. But so far, nothing is truly broken. All right, we've had yet again, like I said, a normal correction so far. Even if we push down into this lower 80s, this is about 34%, very much in line with the most recent pullbacks here. This was 32 back in the beginning of the year, and this was 33 last year. All right, so yeah, so I mean, so far, really nothing is out of the ordinary. Of course, you never know when one of these is going to turn into that, bigger downturn, right? So that's the biggest fear right now. So I would say that truly paying attention for that $75,000 mark, obviously back at this previous high here. This is a really great example, actually. The previous high for here, it's basically our latest low. If we start to break down below that, I feel like that's really where we could start to see some higher time frame transitions to where we could see maybe some a major downtrend start to unfold. Okay, until that happens, this is a traditional, normal pullback that we've seen time and time again. But in the same sense, everybody gets really wrapped up into the idea of like, should they sell and run for the hills and all these things. It's always going to come down to your own personal risk management and your tolerance level, right? But I would say that obviously at this stage, you want to try to scale out on the way up, not try to scale out on the way down as we are doing now. But at the same time, if you're in fear that we are going to continue lower and just get another 40% haircut from here, de-risk if you need to a little bit to the point where you still have skin in the game in case the market does pop back to the upside. But if it keeps going lower, now you have some dry powder on the side to DCA into things on the way down. There's really no right answer, right? And my biggest thing to always point out to people is that everyone is in the market at different stages, and I'm going to manage my account, my portfolio a little bit different than anybody else. And by all means, do I not want to, I try to avoid a 50% haircut as much as the next person. But if I have better, entries from much lower than where we are now, especially in, in anything, of course, it's going to be a little less nerve wracking for a sizable pullback like this, even though, yes, does everybody just wish they dumped everything on October 6th? Of course they do. But we truly never know what the market is going to do, right? So you can only prepare for it to the best of your ability. Again, that setup I pointed out was we were in a danger zone for really since August, since we pushed up to 122 the first time, then 124, and then 126. We've had that setup was like valid basically ever since then. So it finally unfolded here so far. And it's just something that you got to either be aware of, be prepared for, and if you are able to take advantage, great. If not, you have to let the dust settle and see where things are. But again, it's just all going to come down to your personal risk management and profile at that point. Now, to me, do I think that the 4-year cycle is dictating everything? If we're going off of that, then again, like I said, the amount of time that we ran from 2018's low to 2021 high was the exact time frame that we ran it from 2022's low to our current high right here. So if that is the case, then pound for pound, then yes, that's the exact thing we're seeing. And if we're going to see a move like this, then that's just what you have to be prepared for, right? So I'm not going to say that by all means we're not in this overall bear market here. I will say that it's a little too early to fully tell, all right, because we've not truly broken any great market structure yet. And whether we are or not, when we look at things like this, and it's not that this can't just sit like this for a while anyways, and people could just try to be the contrarian and come in when there's blood in the streets, and we could still go down to the 10, 15, 20%, right? But when the fear is in the extremes like this, and for a good time, generally, that's meaning that the overall, the crowded idea right now is that we're headed lower, okay? And even if we do overall head lower, likely that we see some relief come in here relatively soon. It is the end of the year, maybe we get a little Santa rally or something along those lines. It's the end of the month almost, right? So we'll have some new monthly data here. And a lot of times when we just completely only go down, down only for this long, again, we see a few weeks of relief here. So to answer the question, are we in a bear market? I think that nobody really has a great definition of what that is. And we've only had 3 iterations so far of Bitcoin's price action history-wise. So it's a little tough to make a base case off of just a few data points. But in the sense of caution, I would say if you are in a place where you can't handle additional downside here, or if you're worried about something like that, we're not in the best place here to say this is like a go all in type of scenario. We're going to continue straight up from here guaranteed, anything like that, right? We're still at really frothy levels across the board, especially in the stock market as well, right? It's not it shouldn't shock anybody if we were to see corrections in the market here because of how propped up we are right now, right? So personally, I still think that we have potential for a sizable upside to still come. Obviously, we need to see some strength here. A key level for me for Bitcoin to get back up above is at $93,000, all right? So if we're looking for any type of real strength right now, we're currently trading about 87,000. We need to get back above 93. All right, so and if that starts to unfold, then I think we have the probability to get a decent little push here, even if it's for just a few weeks. That translates into the altcoins obviously doing well with Bitcoin more than likely. Stock market probably recovers a little bit as well as we head into the end of the year, that type of thing, right? So currently, I think we just need to let the dust settle a little bit. We're in the midst of the correction that, like I said, we pointed out in the beginning, that AB equals CD. There's actually 2 versions of that. The one I've been pointing out is actually just a smaller one. There's a bigger version that goes all the way back to 2018, so that there is a macro year scenario there that is, something to be aware of. But so far, nothing's broken as far as like a really high time frame. Okay, again, we're looking at, as long as we're staying above that tariff low, no market structure massively has changed there. And we're about 15 to 20%, or not even 15. What are we away from that? 14%. So about 14% away from that region, right? So basically in limbo at this point, right? I think, again, it's a time where you want to reevaluate, just kind of keep a close eye on things, see if we start to get some strength come back in here. And then again, if we start to lose these regions, it's a slippery slope here, folks, because we got to constantly be reevaluating the market as we're coming into it. But I would say nothing to truly fear yet until we start to come down to this area here. All right, another 14% at this point, not the end of the world, right? But if we could start to reclaim some of this ground here, we really do start to look like we're just holding as higher lows, and we can look to treat this as at least a push back up to potentially form a macro lower high, and then see where we go from there, okay? All right, everyone, that wraps up today's breakdown. Look, these kinds of conversations aren't always comfortable, but they're necessary. Markets move in cycles, sentiment shifts, and sometimes the strongest edge you can have is simply just being honest about the data, what it's showing, both the good and the bad. And whether we're in a deeper correction or the early stages of a true bear market, what matters the most is staying patient and avoiding the emotional decisions that usually cost people the most. There will be opportunities ahead, there always are, but they go to the people who stay disciplined when the market feels the most uncertain. Thank you for spending your time with me here today. Take care of yourselves out there. Stay safe. I'll see you all in the next video. And until then, everybody, cheers.